The 20,000 crore rupee FPO of Adani Enterprises will open for 5 days from January 27th onward, with a price band set in the range of 3,112 to 3,276 rupees per equity share. While the floor price is at 10% discount to the Thursday's closing price of the stock, the top end is 5.4% below. Retail investors are being offered an additional discount of 64 rupees. Around 50% of the portion of this offer is reserved for qualified institutional buyers, QIBs, 35% is for retail investors and 15% for high net worth investors, HNIs. Since Adani Enterprises is an incubator of all businesses, analysts expect the renewable energy play to be gradually incubated as well.
It's a good case to buy this stock into the portfolio, given the kind of allocation of money that they would be having towards renewables and toward road assets primarily, and also along with that, I think the other infrastructure assets, including airport. So, I would think rather that I think this particular company remains relatively more positive proposition than before. Two reasons. One, renewable is the next level of growth provider into the economy. And as a result of it, any company who is focusing large into renewable, I think they would probably be the one which would be attracting a lot of amount of investment into them at every given point of time. Now, I think from the perspective of investors and shareholders, I think this is equally, a good track record that the company has built. Adani Enterprise is an incubator of all businesses. So renewable is also going to be incubated into the books of Adani Enterprise, which I believe, at some point of time would be divested and demerged into a separate company as their charter goes. So from that perspective, I believe that this is a good opportunity to buy this stock into the portfolio. Since it is likely to be the warrant-based or the partly paid-based investment at this point of time, it could possibly also give investor opportunity to pay money not upfront but over a period of time. So from that point of view too, I believe that for investors, this would remain a good proposition.
Adani Enterprises plans to utilize the net proceeds from the offer towards funding of capital expenditure requirements of some of its subsidiaries and debt repayment of certain borrowings of the company and 3 of its subsidiaries. Besides, it will also be used towards construction of greenfield expressways, improvement works of certain airport facilities, certain projects of green hydrogen ecosystem, and other general corporate purposes. Given this, analysts expect shares of Adani Enterprises to re-rate in the long term.
The FPO sees the company on a rapid expansion spree. They are putting in place a hydrogen platform which is going to be a $50 billion investment, and for that they would need to raise money, right? So for that they're diluting equity 10% now, and we expect that they will dilute. They will also undertake some kind of equity stake they will give out in their airports business very soon. So while they're going to be raising money going ahead also, we believe that there are significant triggers to for a re-rating of the stock to take place. Currently, because we see a close to 80% upside from this level. So our target is about 6,000 from current levels.
Today, investors will watch out the third quarter performance of index heavyweight Reliance Industries after the market hours. Analysts expect RIL's Q3 performance to be led by telecom and retail businesses, while a sequential recovery in oil to chemicals division may be partly offset by fuel export taxes and weak petrochemical margins. As per Bloomberg consensus estimates, the conglomerate is likely to clock 25.7% year-on-year net sales growth to 2.3 trillion rupees in the third quarter of FY23. Profit after tax, on the other hand, may decline nearly 10% YOY to 16,759 crore during this quarter. Besides, foreign flows, crude oil prices, and global cues will dominate market mood on Friday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.